Good morning. This is Josh Hayes with Hedge Plus, and here's today's market monitor. We're firmly in a stage now where volatility is decreasing and we're leveling off where prices are finding support levels and don't expect to see too much bounce without some major development. I do like the fact that we made that sale that was announced yesterday to Portugal because it illustrates the strength of our exports, one, but also the shifting of demand. That caught a lot of people's eyes because Portugal's not typically a big buyer of ours, but it shows that as these pieces get moved around, no matter what South America does and no matter what their production numbers end up being, that if countries like China aren't buying from us and they're trying to buy everything from South America can't fill everyone's demand, and that's just another example of it. That's good because favorable weather in South America continues. They're getting just ideal weather, uh, rain expected here in the next couple of weeks to close out April. It's right on schedule. Everything seems to be going pretty well for them. In fact, there's a quote in the weather graph to come that kind of says it all. With the notebook crush yesterday, it all depends on how you look at it, right? So there were people that looked at it in a very bearish way, and there were others that looked in a bullish way. And at first glance, to me, I saw that the daily crush was down for the third straight month, and immediately thought, "Wow, what's going on here? This is a bearish report." Well, it turns out the floods in the eastern Corn Belt and in the Delta, Mississippi Delta area, and the Tennessee River Valley area really slowed down production at some plants. So there is a built-in excuse there. So that had a big role to play in why the crush numbers were down. And it also led to surprisingly tight bean oil stocks. And that is something that the soybean complex needs right now, with crude prices kind of holding it back. So it's all in the way you look at things, I guess, sometimes. Wheat market continues to expect favorable rainfall to fall in the southern plains and the hard red winter wheat areas. They better at this point because the market sure seems to be trading on that expectation. As what I've seen this morning seems to further cement the confidence that rain is coming this weekend. But if it were not to fall, it's going to be awfully warm there, so that would be problematic. So that could turn poorly real quick. So that's still something to watch. But the market's definitely trading as though those rains are coming. Taking a look at the weather, it as you can see here, Western Corn Belt gets rain. Um, that forecast is showing rain for Oklahoma, Texas. It's increasingly likely that Kansas will get it as well. It's something to watch as we get into next week. Slow progress in the flooded areas. How many acres will need to be replanted? That's still a question that looks like it won't get answered till next week. Drought continues in Mexico. They are facing complete dry weather until May and into June when they typically see their monsoon. So definitely going to impact their corn crops and increase the likelihood that they'll need to continue to export from the U.S. There's that quote I was talking about Brazil. I read unusually great precipitation for late April. Um, this is their last month to get the rain, and it's often sporadic, but it is coming down in very healthy amounts there, and that has done nothing but cement the prospects for their safrina crop. And there's really no reason to, at this point, to expect that their production numbers are going to be anything other than really, really strong. Taking a look at the prices as of 5:10 this morning, tight range, not much going on. Markets are at least settling in. It's still positive to see more green than red here. Again, these are July prices. As of these prices compared to where these July contracts were 24 hours ago, even though we're up on the overnight about a penny and a half with corn, it's about 4 cents down from where we were yesterday. We were at 4.95 this time. July beans are down about a penny and a half on the overnight, but compared to yesterday, they are up a penny when we were at 10.44 at this time yesterday. And July wheat is up about 3/4 of a penny, but down about 4 cents from where we were 24 hours ago. It's going to take something happening, obviously, could go either way, but I think the greatest likelihood of something that we can anticipate coming soon that would spur the market to jump one way or the other, I think, would be trade agreements. It sounds like they're coming. I read yesterday that Trump administration indicated they're close with up to 15 countries. And wow, wouldn't that be fantastic to start hearing some really rock solid trade deals, especially if they include deals made for U.S. agricultural products, especially grains. So that's coming, and that would be a definite boost to the markets. There's also some positivity, I guess, circulating this morning in the markets regarding China's declaring that they'd like to talk, that they want to talk a fair deal. It did come with the caveat that they would only talk if they felt as though they were being respected or being shown respect by the United States and by the Trump administration. But nonetheless, it's China saying they want to make a deal. So I guess if maybe the language was stronger and it wasn't included that caveat, maybe the markets would bounce even more. But it sounds like we're going to have some trade deals announced here soon either way, and that's definitely a good thing. That'll be all for today. Thank you, everyone, and we will talk again tomorrow.